So this is going to be an interesting trade. It's not stocks this time around. We're going to take a look at the end of summer because it's coming up, but a lot of folks are already looking ahead. And one technician is seeing several things coming together for the natural gas trade of all things as we head towards the cooler months of the year. A 75% decline from September of 2022 is what we're dealing with in context, as you can see here. Joining us now is Katie Stockton, the founding and managing partner of Fairlead Strategies. She's also a CNBC contributor. Thank you very much for joining us here, Katie. I guess what we want to talk about is what the trade is on natural gas. I ask because it's been known in many parts of the financial circles as a widowmaker type trade. Very volatile and has the ability to shake a lot of people out. So why nat gas and what's the trade?
You know, it is a long-term downtrend, and there is, of course, that risk. However, we see signs of basing in natural gas now for really a couple of months. So just this month, natural gas prices have seen their monthly MACD, which is a long-term momentum gauge, flip to a so-called buy signal, and that's for the first time since the beginning of 2023. So for us, that feels like a meaningful shift in long-term momentum. So that's one case for it. We've also seen short-term momentum improve enough to lift natural gas futures above their 50-day moving average. They're now testing their 200-day moving average. As you know, once you get through those key moving averages, it tends to catch more of a bid off of that. Once through resistance around 227, we would expect nat gas to see follow through to secondary resistance, which is roughly 257.
Okay, so if that's the trade, how tight would you make stops? It's not that we're asking you because you're a technician, we understand that. But as a trader, if you're looking at this, you target an upside that you've talked about. What kind of trading strategy would you use to limit your risk in that kind of a scenario?
The support level is around 190. So that's the catch, of course. That would be a lot of risk to take on for a position that's directly in natural gas futures. So we think that folks should use a percentage-based stop loss, whatever they're comfortable with in terms of their broader portfolio. We're looking at natural gas in part because equities don't feel like they're offering a great entry point at this time. So we're getting somewhat creative, looking for opportunities, some of which, like nat gas, are counter-trend in nature. One way to express a view for natural gas is in UNG and ETF. And if you look at that chart, you'll see that UNG has continually seen relief rallies within its downtrend right up to its downtrending 200-day moving average. There's about 23% upside right now to that 200-day moving average, and that's compelling to us combined with this improved momentum.
All right, Katie Stockton with the trade on natural gas as we head towards those colder months. Thank you very much. We appreciate it.
Of course.
Amazing how much natural gas has come down over the past 2 years. There you see it.
And
that's pandemic related.
So a little about 2 years ago.
And Ukraine.
Yes, in August of 2022, just about a little over 2 years ago, we're talking about over $10 per million British thermal units. We're at 223 right now, just to give you an idea of what kind of a downtrend that Katie was talking about. But, you know, there's a seasonality.
And she says your low point would be about a 190 or something like that.
Yeah, she was targeting that level.
Right.
But again, this is crazy because it's often weather related, but it's not typically just easy just to say, hey, buy in the summertime and then sell in the wintertime. It's just not. It's been a tough road for a lot of nat gas traders.
All right, Dom, thanks very much. Dominic Chu.